Welcome back to Ignite&Scale, the show where we dive deep into the stories of founders who are reshaping industries and building the future. Today I'm joined by Charlie Cook, founder and CEO of Rightcharge, a company simplifying electric vehicle charging for fleets and drivers and recognised as one of the top 100 trusted brands in fleet. I'm excited about this one, not just because Rightcharge is at the heart of the EV revolution, but also because I was one of the early angel investors in the business. I've had a front row seat to Charlie's journey, the company's evolution, and the huge opportunity ahead for both EVs and Rightcharge. Charlie, let's start with your story. Before Rightcharge, you studied at Imperial College Business School and built a strong understanding of both technology and business. Perhaps you can start with telling us about your early career, what experience shaped you as a founder, and then what led you to be so focused on the EV and clean energy space?
Certainly. Thank you, Mike. Pleasure to be here. My interest in the climate space started really at university, to be honest with you, which is now over 10 years ago. So I'd watched a couple of documentaries at the time to understand the challenges that the world is having from a climate perspective, and ultimately figured that's what I felt like I would want to get stuck into. To be honest, for a long time, I was interested in deployment of renewables, deployment of solar, deployment of wind. As you mentioned, I was studying for a year at Imperial Business School, and their focus there was on the climate science, but also on the sort of finance element of rolling out these big infrastructure projects. So that very much interested me, and I actually ended up applying for a role back then at a global oil and gas company of all places, but they were investing billions into rolling out like solar in South America. They were doing floating wind turbines off the coast of Scotland and off Hawaii. So interesting job, and they offered me this strategy role. But just at that time, I happened to be doing an internship at a brand new startup, and that ended up, that was Octopus Energy, and they were just launching their EV leasing business, Octopus Electric Vehicles, around 2018. And partly because I wanted to work in a early stage business, because I'd always wanted to start my own business, so that felt like the place I'd get the best experience, the most relevant experience. And partly just because I got very interested in the EV space. That was where I decided to go. And then that was my education in electric vehicles, really. That was where I sort of started to transition a bit from being all about the energy side and the generation side over to this EV space, which at the time was actually so nascent. It felt like perhaps a slightly more interesting stage of the market to get involved. So that was the moment it all transitioned.
And take us back to 2020. I remember it well, but you launched Rightcharge with a mission to make EV charging more simple and more cost effective. But what was the kind of spark or the moment you knew Rightcharge had to exist?
I don't think anyone's asked me that specific question before, and it's just jogged my memory back to a moment where where we were building a unit in the business back at Octopus to install chargers, and we were giving drivers a few options. And so I literally just had a spreadsheet of the different products that were available at the time, different brands of home chargers, what their features were, and what their pricing was. And it became abundantly clear that none of them were talking about the features in the same way as each other, even though they broadly offered the same thing. And their pricing was based on totally different assumptions. So one could look more expensive or cheaper than the other, but it's just because they'd assumed you might need more cabling or something like that, which is just a generic assumption. So it was obvious that this market needed some level of unifying and consistency. And that was the spark originally, where I thought, okay, I've always fancied trying something myself, learn about this new industry with that role, and maybe there's something here where we can make that journey simpler for consumers. So that was the very, very, very beginning of the journey, like you say, back in 2020.
I mean, startups are very rarely a straight line, or at least I'd say they're never a straight line. And Rightcharge has gone through some important pivots really to get to where it is today. I guess initially it was more a consumer focused platform, and now it's a kind of go to partner for fleets and larger organizations. Can we talk about some of the lessons that you've learned from these pivots, and how and when did you know it was time to adapt?
So we spent, for context, about 2 3 years focused on the consumer space, which is what I knew primarily from my previous experience. And we built great products. We brought the first marketplace to market for charge point installations. We brought the first tariff comparison service to market for EV homeowners. So instead of just asking about how big your house is, it asks how big is your house and what EV do you drive, how far do you drive it, and then it still today, it's a service used by thousands of drivers every month. It gives you the best recommendation for the cheapest tariff on the market. So I'm proud of what we built, but ultimately you can work as hard as you like and you can be as smart as you like. But if the market's not there, the market's not there, which I'm sure you are more than familiar with, Mike, having looked at so many businesses, in your position. And that really had to be the realization, was that this just wasn't the area where we could build the business and have the impact we wanted to have. Because a large part of this for me is having an impact and being able to help accelerate the sector. And it felt like we weren't really going to be able to do that. So simultaneously, we saw that a couple of things were happening in the EV space. Most electric vehicles are not bought by consumers, they're actually bought by companies. Today, it's about 60% of new electric vehicles are bought by businesses. So, if we can make that transition easier for a business, then we have a real shot at, really accelerating the EV transition. We dove a bit into that we dove a bit into that fleet space, and we found a couple of pain points. One was being able to charge on lots of different public charging networks without it being horrifically complicated and administratively messy. And second was, how do you reimburse drivers who are charging their work vehicles at home? It's very complicated. You've got all sorts of things happening. You've got basically one energy bill that doesn't really tell you anything about how much has been used. So that's the challenge we tackle today. And we aggregate all those payments into one bill. So a fleet gets a monthly bill from Rightcharge. Driver gets one card they can use on 70% of the public charges. And then all of their home reimbursements, all their home charging is tracked accurately from data from chargers, data from their energy supplier, data from the vehicle. And then we just simply reimburse exactly what they've spent onto their energy bill. So it's super easy, massively less admin and for both the team and the drivers. But maybe just one last point on that, Mike, which is like, why did we pivot? I think startups, founders will always hear and be told that you need to find product market fit, but it's kind of a subjective thing, right? Like, what is product market fit? I don't think anyone really has a single definition for that. I think the closest I've come to understanding it is more like a feeling. And it's when you feel the market pulling rather than you having to push. I personally believe that's probably the best definition of product market fit. And I think we've really gone from a phase where we were pushing, 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 and now we're in a phase where we can feel that pull. And that just makes life a lot easier. So growth comes in that moment, like it is now for us.
And just to follow up on that, because clearly pivots are never easy, and this was quite a big pivot going from B2C to B2B. And clearly, what you're offering is win-win. It gives clarity in a complex area, which is great. But it is notoriously difficult to secure trust from major fleet customers, regardless sometimes of how good the technology is. So I guess I'm interested to dig into, how did you get that trust from some pretty big companies? And then two, how did you have to pivot with the technology as well? Was that already there, or did you have to pivot the technology as well as the idea?
I mean, I could probably answer both of those really with the same sort of story. So we did initially look into options around how can we take what we had on the table from the consumer side, the expertise we had, the network we had, the technology we had. Obviously, it was really very much around home charging for consumers. So moving into a space which is at least partly about supporting and solving home charging for fleets made a lot of sense. We could transition a lot of what we already knew and had gained over time into that space. A big part of that is relationships with energy suppliers. So one of the sort of two best, sort of coolest things that we can do from a home reimbursement perspective for fleets is, one, we don't pay the employees reimbursement into their bank account. We actually put it onto their energy bill itself. So it's a really clean, nice, smooth way to reimburse and sort of just nullify that extra expense. Two, we can get their tariff rates live from their energy supplier. So again, that means that there's far less admin for the driver. They don't have to do any admin when they switch. We just detect that straight away and we update that automatically. But like you said, still, if you've got something you can bring to the market that's significantly better, you still have to win trust, and that is really hard. You're a new business in the space, a new brand. You're just building relationships cold. It's not easy to get a big business to take a bit of a gamble on you ultimately when you're very early. So I think we somewhat killed two birds with one stone, in that as part of our discovery process, and that was before we designed anything, we went out and we spoke to maybe 50 fleet managers just to talk to them and learn what their pain points were, what their challenges were, etc. And through doing that, obviously, we helped us to develop a product that was genuinely useful, and we were focusing on the things that they cared about. But it also helped us to build relationships before we'd even started designing our app. And so that helped us then, after, say, 6-month process of design and build and launching the prototype, we already had really good relationships with fleet managers who felt like they'd sort of come with us on the journey somewhat. And the AA is an example of one of those businesses. So the AA fleet manager at the time, he was super helpful as we were designing the product. And then within, I think, around 6 months after we launched, the AA came on board as one of our customers and one of our main customers today.
I mean, just going back, actually, when I made that early investment with a number of other people in the industry as well, we were all very excited about EV. We knew it was coming. That environment was a bit different, wasn't it? The ESG agenda was gaining a lot of traction, a lot of momentum. It felt like it was going one way very quickly without any kind of obstacles in the way. And I guess what impressed me about you was that you weren't just chasing that EV trend. I think there's a lot of money being raised on, well, EV is going to change the world. We're going to be part of it, and it was almost, being part of this macro graph. Whereas you were very focused on, I can identify a number of real problems, and I'm hell bent on solving these problems because of your background, I think, as well, from clean energy, running a business, and automotive. Are you still as excited about the clarity of the emission, the size of the market, and your ability to execute with the model that you've got now, given that back then it was everybody was really, really excited about EVs, and people have knocked it back since then, and there have been obstacles. Are you more or less excited about the business you have now?
That's a good question. I think more excited, honestly. Um, but maybe like a different type of excitement. At the very beginning, it's quite a unique moment, isn't it? Where it's all brand new and it's creative and you're sort of stepping into the unknown. Obviously, it's a bit different, but um, the opportunity, say 2025 to 2030, for me is super exciting because this is where the market really gets serious. The first half of the 2020s have been exciting initial launch, if you like. So 2019, 2020, you got the Model 3 coming out. Annual growth rates are like off the charts, 50, 60%. That's the moment where everyone was like, wow, here we go, all in. Growth didn't stall at all, but, reduced down to, I don't know, perhaps 20, 30, 40%. And so there was a bit of a moment of people being like, okay, reset a little here. But the volumes that we're talking over the next 5 years are going to eclipse the volumes that we've seen in the last 5 years. And that's not just the UK, that's Europe, that's the world. So, for example, we know that by 2030, there'll be 100 million people around the world who are driving an EV for business and are charging it at home, which is just a incomprehensible number of people that are going to require the service that we're providing. And so it's kind of like this moment now where it's getting real and the opportunity's 10 times bigger. And I can feel more than ever now that we've got an opportunity to really play a role in that future. So yeah, it is exciting.
Yeah, no, absolutely. I mean, just drilling into that the EV point in a bit more detail. I mean, in terms of electrification, what particular trend excites you the most there? And as a follow up, how do you see, does your platform need to evolve again over the next 3 to 5 years to accommodate that growth, or do you feel that it's poised for the growth that you know is coming in the next 5 years?
You've got a couple of trends. You've got one trend which is simply electrification is increasing. Um, we've just released a report, 2025 business case for EVs, and when you look at the numbers, it's becoming clear that in many, if not most situations, it's probably cheaper now for fleets to switch their next vehicle to EV than petrol or diesel, which takes it further than just the sustainability argument. Now there's a financial drive, so obviously we're going to see continued increase in electrification rates. We are looking at this at the moment from a sort of European perspective, I suppose. So the first year and a half of the company's been UK focused. We're now localizing the product for 4 European markets, and we'll be live in those markets before the end of the year. So a sort of trend that we're looking at ourselves is that sort of like geographical expansion. And then the last one is home charging is already 70% of charging on aggregate across Europe and the world. And we don't see any reason why that's going to change. Um, it's 10 times cheaper than charging on the road. And if you can do it, if it fits with your business practices, which it does for many, many businesses, then it's the obvious solution. So we only see this market getting bigger, but it's going to get more interesting and sophisticated. And one of those evolutions will be vehicle to grid at some point. So your listeners will know, Mike, but like the concept of pushing power back into the grid as opposed to simply pulling it into the house to charge the vehicle. And there are some commercial applications today available on the market, but it's quite limited. But it's only a matter of time, whether it's a year, 2 years, 3 years, where the sort of technology and the markets evolve to a point where it's much more ubiquitous. And at that point, it's going to be very interesting. How do you start tracking an employee's charged at work? They've gone home, they've charged up a bit more, they've pushed back half the battery at tea time. Like it's a financial ledger that you're going to have to figure out. And how do you get the data? And fascinating questions around like fleet policy when your drivers can start making money overnight. So it's just going to be an even more exciting space to work in 2-3 years.
No, that's great. And you touched on international expansion in Europe, which is really exciting, and that's fantastic. I mean, I'm assuming this model can be adapted outside of Europe as well. And is that on the roadmap in the next 5 years? How big are your international ambitions?
As ever, the reality is it evolves every year, doesn't it? But we're focused intentionally on Europe right now. We are having some very, very kind of early conversations and looks at what's available, what the market looks like in North America, both the USA and Canada. Australia's kind of interesting. Like the market had a bit of a boost last year or so, and so that looks like that is becoming more and more of an interesting place to operate. So to answer your initial question, there's no particular reason why what we offer won't be as useful in other parts of the world. It's a similar story for businesses all over the world. If you're asking your employees to drive vehicle for work, then many of them are going to be charging it at home and on the road. So how do you make that as easy as possible? When will we go outside Europe? I'm not too sure, but our international expansion is driven primarily by partnership opportunities. So, we're still a small team, still a relatively early stage company. Being sort of on the ground with a team in different markets is probably overstretching us. But the way that we can access those markets without that type of stretch, if you like, is to simply partner with someone who's already operating in those markets. They can handle the sales, the marketing, the customer contracting, the billing, the customer service, which just means that we can support them from London, and take advantage of some larger markets. So I would imagine if and when we go beyond Europe, that's how we'll do it as well.
Charlie, thanks so much for sharing your journey. I mean, from idea to impact, you've achieved so much really in the last few years, and I get the impression you're only just getting started based on what you said today. So congratulations, and one company that I'm still very, very excited about. In terms of anyone listening, if you're a fleet operator, EV driver, or just someone curious about the clean energy future, what's the best way to get in contact with you if they've got any queries?
Reach out. I'm on LinkedIn, but also just drop me an email. So it's charlie.cook@rightcharge.co.uk. Always a pleasure to talk.
And we'll have that in the show notes as well. But thanks again, Charlie. It's been a real pleasure.
Thank you, Mike, and thank you for your support.
If you want to listen to more episodes of the podcast, we're on all good audio platforms. Our website is also www.cambriaprivatecapital.com, and you can also find myself on LinkedIn and Twitter, where we publish our weekly blogs as well. Please do get in touch if you want more information.